Hi everyone, Piers Bolger here, the Chief Investment Officer at Viridian. Well, as you know, we work very closely with the team at Carrington's, Jason, Brian and Nella, and it's been a little while since we last caught up, and certainly there has been a hell of a lot going on in financial markets, and we thought it'd be worthwhile just sort of touching base, sharing with you some of our thoughts in terms of some of the big issues that we're seeing in financial markets, and as well as how we think that that's going to play out in 2021. Probably the most important aspect to note is that COVID's still with us, very much so, both in a domestic sense as well as what we're seeing on a global scale. Europe's heading back into lockdown. US cases are nearly topping 100,000 a day, so there's a significant impact of COVID still very much on the forefront, both from an economic point of view as well as from a financial markets point of view. Australia continues to do exceptionally well, not only in an absolute sense when we look at the case numbers, but equally certainly in a relative sense compared to the rest of the world. And from our perspective, that's really assisted the growth that we've seen in financial markets over the last sort of 3 to 6 months post the worst in terms of that March-April period. So from the perspective of where we sit today, we think the reopening of the Australian economy is going to be quite beneficial to Australian equities and Australian financial assets heading into the back end of this year into 2021. There's going to be clearly ongoing challenges. Certainly when we think about JobKeeper rolling off, what does that then mean for parts of the economy? We've got high unemployment, and so the fiscal spend that we've seen from the government, as well as the changes that we've seen in the cash rate from the RBA, hitting another all-time low of 10 basis points just done on Cup Day, continues to highlight that the economy has still got a long way to go. And in our view, we're still going to be probably talking about COVID, well past 2021, and the implications of that as well in regards to not only the growth outlook for the domestic economy, but equally how we're positioning portfolios and how we're managing the assets on your behalf. The other big thing that we've seen more recently clearly has been the US election. The result has pointed that Joe Biden and the Democrats have won the White House with over 270 electoral votes. They're now moving into the transition phase. Again, that's providing some interesting challenges for the new administration on the back of what we're seeing at the moment. But in our view, doesn't change the direction in regards to financial markets in the near term. We think the policy footprint, particularly around the spend on infrastructure as an example, was certainly supported by both the Republicans as well as the Democrats in that sense. But we definitely have a very different individual and personality. And from that perspective, we think that's only going to be positive for global relations, interrelations, particularly with the US and its major allies in Europe as well as in Asia. So from that perspective, we think that the change of government is going to be an absolute positive in that context. The other important point to note that we're seeing is the recovery in financial markets, not only post the election, but certainly through that second quarter, as well as what we're seeing from September onwards. And, from our point of view, we made a number of changes. If you remember, we made a number of changes to the portfolios back in March. We certainly took the view that there were obviously an increased level of risk in regards to the impact that was going to have, the lockdown was going to have on financial market performance. But when we really started to see, as I said, central bank support, we saw governments really start to get behind providing that fiscal support as well. And that has resulted, obviously, in financial markets really rallying quite strongly through the second half of this year. And as I said, post, obviously, the election result in the US, we've seen another strong start to November. As we sit here today, just given what we're seeing both in terms of central bank policy as well as the fiscal response we're seeing from governments around the world, we continue to remain actually quite constructive on the outlook for growth in 2021. And accordingly, we've been repositioning our portfolios along those lines. We've been reducing our exposure to defensive alternatives within portfolios as well as fixed income, adding a greater weighting to equities, predominantly in Australian equities, as I said, given our preferred outlook for the domestic economy relative to the rest of the world, but equally have been repositioning in emerging markets and small caps as well. within our portfolios. We believe that that's operating and leverage to a rebounding growth through 2021, we believe will benefit not only emerging market economies, but equally small cap businesses as well. So that reconfiguration of our portfolios, we think will continue through the course of 21. We're hopeful that a virus vaccine will come to hand, and we've seen obviously some data out of the US over the last couple of days that certainly points to some positive information from companies such as Pfizer and Moderna in terms of their vaccine trials. So we think there could be, as I said, another windfall in regards to dealing with COVID in 2021. But as it relates to those stimulus packages that we've seen come through, both in terms, as I said, of governments as well as central banks, they're going to be in play, in our view, for a lot longer than 2021. And from that perspective, it's one of the reasons why, as I said, we've been making those changes to the portfolio, looking to add incremental growth in regards to our portfolios, moving out of those defensive positions that we've held for some part of this year, and continue to hold, but as I said, at a lesser weight than what we have done previously. So heading into the back end of the year, certainly November's been a terrific month. We do expect market volatility to continue. It's not going to be a one-way street, unfortunately. But as I said, that growth outlook from our perspective, underpinned by an improving global response to the pandemic and an improving outlook as it relates to either therapeutic and or vaccine drugs coming available, we think that's going to be a positive environment for assets, financial markets, and particularly growth assets as the global economy recovers. As always, the team would love to hear from you, and if you have any queries or concerns about your portfolio, please feel free to reach out to Jason, Brian, or Nella, and we look forward in touching base again soon, hopefully before Christmas. Thanks, and bye for now.